Okay, hi there, guys. I think we can start. So, welcome to Monday's Bretton Monday's market outlook or the week ahead, basically. So, we usually go through the whole week, especially on the fundamental side of it. So, my name is Kenny Simon. Today is the 14th of June. So, we are on Monday's webinar, and this is a market outlook week ahead webinar, and then it's followed through by Wednesday's middle of the week sort of preview, as well as Friday's end of the week or market wrap up. So this week, for today, we will actually be looking at for now the past 24 hours, what has actually gone on. There's a lot of news revolving oil. I know yesterday we had a webinar on commodities, so we want to follow through oil's position, both the US oil as well as the UK oil. But most importantly, we want to look at what has actually been the catalyst or the fuel for the US oil, gold, USD as well, because it does actually replicate and create a ripple effect to the other majors as well as gold's position. So we've got the FOMC up. So what I would prefer to do is to look at out of the chart first, and we'll start off with the economic calendar right here. It seems to be quite a busy week starting from tomorrow, and today's economic calendar as of Monday the 14th is like any other normal average Monday in terms of the economic calendar, meaning very quiet as well. So we had some Japanese data, but we didn't actually really have high impact, maybe let's say more than 2 or 3 high impact ones. We've got everything on average. So we had more manufacturing and industrial numbers, which basically was positive for the JPY. So JPY, I would assume or presume that it would actually be sort of on the bullish type stand. Perhaps we don't know that yet, because now what we want to do is want to look at what sentiments would actually be governing in the market, whether or not the USD, especially the position of the DXY, the USD, how is it actually moving now before the FOMC? I think FOMC is on a Thursday. So we want to also look at the DXY, which is the USD Index, comparing the USD in a basket of currencies with 6 other top currencies. So the DXY really important. So when we go on to, let's say, Market Watch or Google itself, just to look at the current movement of USD in general, it does actually look like a little bit of depreciation. But we want to look at it overall. It's still in the 90s mark, and it's actually quite strong, looking strong at this moment of time on USD in general. But then now the investors and traders' eyes are on the FOMC. A lot of eyes are on the inflation, the USD Treasury, 10 years Treasury, and all that kind of thing. So we want to look at that, because that would also impact gold and all the other markets, especially. So this is one side of it, and we can see here under Market Watch recent news as well. Talk about Bitcoin a little bit, but they talked a lot about, as of last week, the US initial jobless claims as well fell. So basically an increment of employed people as opposed to unemployed. Also, US data was positive as of last week. So we want to look at whether or not this USD appreciation is actually going to be fueled by more positivity in the market, because at this moment of time, as of late last night when market opened for me here, as well as early this morning, I've seen that there's more and more depreciation of gold. So gold is on the way down. So are we expecting a lot more of the US data going up and fueling that? So there is a sentiment tool as well, roughly, used by IG Market right here, created by IG Market. It's not too bad sometimes, but as I've mentioned before, we don't use only one tool. We like to confirm, and we don't actually rely on any tools, especially if it comes from other external websites, because it can actually anytime have, certain kind of biasness towards certain type of approaches and certain trends as well. So we just want to get a bit of an idea. Now here, for example, this sentiment tool by IG Market, it's not too bad, but there are ways to actually use it. So it's used, I think it's better used as a conservative tool, meaning that you are using it as opposite type direction. So if here, for example, you look at the bigger percentage, for example, let's say if you've got this one here, the first one is for Euro USD, right? 51%. Let's say 51% bigger are on the rate is selling. So then you do opposite. You look at whether or not you've got buying opportunity. So you look at the majority, what they are either net long or net sell, and then you look for opposite opportunities, because then we are looking at whether there is a reversal. So here, for example, we have got 76% on USD, and then you've got 74%. See here, it says mix. It's not very clear, but here you see how it's equal, the USD and the gold. So USD CHF, they say it's 76% right here, 74% right here. So here, I would be very careful in looking at per USD pair trade. So that means I will look at each major that has USD in it to actually look at whether or not it is really reversing or not, because that's why the sentiment tool, sometimes it's really nice and accurate when you combine it with your own analysis on the chart. But here is just to give you a little bit of an idea, like a shortcut to go and pick certain currencies, like how you use your action Forex as well. So you don't waste too much time in browsing through too many currencies one by one onto your chart. You see, you want to avoid doing that at the first time. So that's why we use tools like this, just to help us guide us to pick the pair that looks like the one that we can actually analyze further. So here, for example, you've got 75%, but then this is for Euro CHF, and the sentiment is mixed. So we don't look at the mixed ones. We look at either the bearish one or the bullish ones, but we need to look at the ones that has, let's say, 60% and above, kind of thing. Like this one here, USD CAD. This is looking quite clear, but it says bullish right here, 73% bullish. So I would look at whether or not there's correction as well. The trend may actually be up, okay, but I want to look at correction because it's too many net longs. Too many people have actually been buying, so there's bound to have a kind of reversal, and we want to maybe potentially able to trade that reversal as well for those who are interested. But we want to look at how far, where it could actually reverse, and then we want to look at whether or not USD CAD can pose a little bit of trade idea and trade signal for us. But then we then know whether or not we can actually confirm it with the charts on our own, as well as the other tools. So when I have gone on to the market news itself, let's say we're talking about out of your chart at the moment, we need to do a little bit of sentiment analysis, a little bit of market analysis, trend analysis, very, very little, just so that we get a bit of an idea. Now, we've talked about oil yesterday, on yesterday's Sunday's preview of the market for especially commodities. And this does include crude oil, of course. And here itself, the first news that are highlighted, even in Market Watch, various other places in Bloomberg this morning, we can see that we've got interest by investors knowing what is happening to oil so far, what are the factors, and it has surged, basically gone up bullish to 32-month high on demand. This is the first news that we can actually see. This is the first sort of breaking news or headline that we need to pay attention to. And then we take this headline and look into the prices that we have highlighted as well. I've highlighted yesterday crude oil's price to actually enter, or is still entering, a bullish or buying zone. It is now following this news as well, I would think fueled fueled by this news. And we can see now where we need to actually exit. We buy. We've mentioned as well yesterday, we are on a buy, so we can buy at any moment of time, right? And we've also got some pending orders type prices as well that has been given as of yesterday. Then we can actually look at where we can actually exit. But now we've got a bit of a confirmation that the bullishness of oil is getting more and more, and that does actually apply on the UK oil as well. So here we have got high demand optimism, and tight supply conditions. So this is confirmed by news today on Bloomberg as well as the other mainstream media. So they are confirming that. That's good. Now we need to go and confirm on where to actually exit our buy. So our direction is buy on oil, but where do we exit matters a lot, because this is where our profits basically is decided for us. Okay, so that is one piece of news that just pops up as of today, the oil side of it. Also, we see that the Vix Index has actually fallen. The Vix Index, VIX, has actually fallen. The Vix Index is actually the fear index. So what is happening in this time? I mean, from Hong Kong Open, Singapore Open today, and earlier, both Australia and New Zealand Open, I see that we've got a sentiment of risk on. That means that majority of traders, investors are actually taking risk. The reason is mainly because of all the stocks are hitting a record high, as well as this is showed here in the next headline. This is also today's news, and that has actually been sort of the appetite and the sentiments as of this morning. So I would think that that kind of sentiment would also fall through in the UK Open today, as well as the US Open and our European Open and all that. So I see that it's risk on, not risk off. So risk on also means that they'll go into buying and buying the dollar, the stocks, buying a lot of buying. So that actually means that there is not much interest to actually go into gold, mainly because it's not a risk of environment, is a risk on environment. People, investors, traders are willing to take the risk. So this is what is happening, I think, as of this week. So also we are driven by loads of economic data starting tomorrow. So starting tomorrow, we have got the GBP. We'll take a look at the economic calendar once more. But from what I've browsed through, I think from Tuesday right up to Friday, we can expect loads of volatility. We've got the FOMC as well. We've got a very big, long string of data, if I'm not mistaken, both Tuesdays and Thursdays, very long string of data. And these long string of data includes more than 50+% of the high impact type data, economic data. So that's good news for us. That actually means that we may expect lots of volatility followed by liquidity as well. So we need to trade, and we can actually trade and look at better opportunities as well, especially when volatility and liquidity can help us to not only move the market a lot, but sort of clarify and solidify the trend for us. This is the most important. So if they solidify the trend becomes stronger and is clearer for us onto the charts, then it's easier and better for us to lay out all our trades, and we can then trade in a good way, meaning that we can write the trend clearly, as well as lay out all our TPs, our exits as well. So we've got the S&P 500, the Nikkei, basically all stocks are hitting high. I think both technology stocks and services stocks are doing really well. In Australia as well, is actually have got this risk on kind of thing that has actually gone on there. So the Australians, especially in the Australian market, I can actually look into all other correlated pair, right? The New Zealand dollar, the GBP as well. So gold's sentiment usually, I mean, these couple of months still does have some correlation with gold. So I would expect if gold is falling, USD is up, your Vix Index is called the fear index. If the fear is up, basically it's risk off. That means that you've got a lot of fear in the market. So people are more careful. That is called a risk-off environment. Then people will start buying gold and safe havens and all that. So that is not happening at this moment of time. The VIX is not really, let me just see whether we can look at the VIX as well. As you can see, the Vix Index, it's called the Fear Index, okay? So the Fear Index is actually on a fall. As you can see, you've got 2.8%, which is more than 1.1%, 1.5, which is quite significant. So it's actually showing that there's a pickup of the falling of the Fear Index. So the fear is falling, meaning that people are a little bit more optimist, more confident, and more greedy as well. And all this positive thing that makes you want to buy, and then you don't, most of the investors may not want to close their trade so much, because it's not driven by fear, it's driven by more targets and aims and objectivity and all this kind of stuff. So this will rise up basically their intentions to put in more trades, their intentions in leaving the trades more open. So that can also be replicated to us as retail traders as well. Okay, so what that actually means, very simple, is that we probably will have a lot of volume and liquidity and also a lot of volatility, which is good for us, but we need to just still take it little bites and ride along a good solid trend. And that is the way we can actually govern our risk, because the bigger boys, they don't trade like that. When they are in this kind of mode, basically means risk on kind of mode, they'll just leave everything open because they can afford to do that, and they don't care about the volatility, the correction and all that. They just got one aim to go, and that's what they will do. So most of the market will actually be doing that today. So let's also take a look at the economic calendar just very roughly before we get into the charts and get into some trade signals, entries and exits and all that. So Monday, June 14, as you can see, really quiet all here, really quiet. We don't have those red bars as well, too many, no red bars at all, meaning high impact news. But then on Tuesday, tomorrow onwards, Tuesday the June 15th onwards, as you can see, let me just scroll this down a little bit so you can see the Tuesday's one. There you go. Okay, so Tuesday. So Tuesday, tomorrow onwards, we can see that we will have Australia opening up the data, starting with Australia first. And we've got the minutes of meeting by the Royal Bank of Australia. So we can see that there's some impact there. But we want to also take a look at how Australia will be fueling the market in Australian crosses. Is it more on the negative side, pessimistic side, or optimistic side? So this is very important, and hence the reason we will go and look into the trends as well on Australian crosses to look at and ride along the trend, because we will have, when you see lots of Australia data together with the GBP as well as some euro figures as well, it's good for us to look into these pairs as well. And usually it creates lots of volatility. And we also have the US data, the retail sales one. So we have got Governor Bailey's speech that usually does actually impact quite a lot, but we have on the same day, Governor's Bailey's speech after some very important data, especially the ILO employment and the claimant count change. These are very, very important, very high impact as well. And then together with that, we've also got the Germany's harmonized index. So that actually means that maybe potentially Euro GBP crosses will be quite good. So I want to also take a look at GBP AUD, let's say. Okay, so now we'll just roughly look at certain pairs that we can base on the economic calendar, but then we will take a look at the Action Forex heat map as well as the top 10. Then we can plan on the exact pairs to pick for today. So roughly, just based on news alone, we can see that GBP AUD, maybe we have to go and look at whether there's some clarity of trend. whether or not whatever we pick roughly right now matches with what we see for today in the Action Forex top 10 movers, as well as the heat map itself. So we want to do a bit of a rough one, and then we polish it up so that we can actually pick the right pair. So here, for example, the GBP right here, Euro GBP definitely is something that we want to take a look as well. And crosses in terms of USD crosses, because we have got the USD sort of two of those are the retail sales ones. So we want to look at maybe not particularly USD crosses only majors, but the GBP and the AUD combined with the USD. So we want to look at USD crosses, of course. So we have to look at majors. We can start off with the Euro USD first, and then we take it through to GBP USD and AUD USD, and then we can take it from there. So these are the ones that we can sort of play around with in the first instance. But one of the best things to do is to look at the Action Forex top movers. So now we've done a rough thing based on the economic calendar earlier on, just to look at which countries would actually be impact. So we've got the Euro, we've got the USD, we've got the GBP from there, from the economic calendar. Now we want to look at what's going on with let's say the top 10 movers right here. Okay, so the top 10 movers as of today, the way I look at it is we've got lots of focus on the NZD as a currency. So a lot of NZD and a lot of NZD buying. Okay, so we've got NZD buying right here, another NZD buying right here, combined with GBP. The first three NZD has been combined with the CHF, with the GBP, and with the Euro. So that does actually look quite interesting. We've got NZD focus. I want to look at NZD crosses as well, definitely, because if they are paying attention on NZD crosses, and we do have GBP and Euro as the focus as well, so that it's not because tomorrow only it starts with all these ones that I talked about as well. So then today it's going to be a bit quiet, but we can actually see maybe we have to take a look at the NZD JPY with the 4 dots right here, meaning that it looks like we have to take a look and re-evaluate the trend side of it, because from the top 10 itself is saying that we have got clarity of trend for NZD buying in 4-hour, daily, weekly, and monthly. So what I want to take a look at is definitely NZD JPY. It's said to be on the upside. We want to confirm and look at whether or not the trend is clear, whether or not the trend is strong as well, and what are our levels that we can actually enter. The other one, of course, NZD USD as well. Okay, so we want to take a look at NZD USD as well. So that's basically it. Just want to keep it really simple. We have NZD pairs right here. So because the focus has been on NZD, let's look at the volatility charts. And we want to look at NZD, Euro, GBP as well, because the top three NZD is combined with USD, GBP, and Euro. So if we go on to NZD and click on the 4-hour plus the daily, and we pay attention on the daily, obviously, right there, we can see that NZD definitely is overall very volatile. Not so much with Euro and GBP for now, but definitely for USD, for AUD, for JPY. So we've got three. NZD, perhaps we want to look at in terms of volatility. USD, of course, JPY, so USD, JPY, and also CHF for now. So that does actually tally up a little bit. And if NZD and JPY, a lot of buying on the other crosses compared to the JPY. Let's say if we go on to the heat map and we want to look at JPY, just so that we know whether or not it's risk off, risk on. If there's a lot of selling of the JPY, or JPY is really on the downside or bearish, then it confirms the market sentiment to be risk on. Lots of greed, lots of buying, and lots of selling of gold, basically. A lot of selling of safe havens. So we can confirm that. And we look at markets here, heat map. Okay. So heat map in general, okay, we've got reds and blues, not dark reds, dark blue. So it is quite clear, it's quite nice, especially on commodity currencies like CAD, AUD, and NZD. They're all strong, they're all picking up. Okay, so that does actually tell us that oil is definitely on the upside. Mainly we've got Canada, because all the ones here are weaker than Canada, weaker than Australia, weaker than NZD, but it is appreciating against all the others. So this does give me a bit of an indication that perhaps the commodity currencies like CAD, especially that it correlates with oil, is on the upside, but we want to look at it individually of currencies right now. We want to look at whether or not it's picking up really nicely, especially with a lot of dark blues in a column and dark reds is what we're looking at. At this moment, maybe it's a bit too early. We don't find that yet, but it's giving us a little bit of clarity right here that we may have commodity currencies, especially CAD, on the upside. So CAD is correlated with oil. So we want to take a look at oil on the chart as well, because we have also expected oil to start moving up, and it has been confirmed, fueled by market news, and also the mainstream media is talking about it a lot. So a lot of positivity going into oil. And then that will drive Canadian dollar to the upside. So be careful when you're trading your Canadian crosses, and make sure you are on the other side, buy side for Canadian dollar against the other currencies. So the Canadian dollar I expect to be stronger compared to the other ones. Here, for example, we have not bad blue, more bluish, I would think. It's actually trying to take out all the red ones right here. So red ones are concentrated in this area. And this is quite interesting because you have Canada, Australia, New Zealand, as I've mentioned, there are commodity currencies. You can see that there is some unpredictability on all these three, and all these three are really clear to be strong as well. So we just want to be careful with it, just to understand that don't go on to heavy selling on CAD at this moment of time, because it is fueled by good positive news of oil, crude oil. So that basically means that crude oil will drive prices up for the CAD. CAD would most probably be bullish, on the bullish run. So try not to have any sell orders for CAD onto the CAD, okay, at this moment of time, just so that we don't get into a trap. Okay. Based on this, not very clear actually in terms of trend, but that's okay. We have got some pairs that we want to pick out and then go straight onto the chart with as well. But before that, let me just also go on to the action bias right here. Okay, we've taken a look at the top 10 heat map. Now we'll taking a look at the action bias just to see whether or not we've got any row, like the whole row is either red or blue starting from the 1 hour, because we've got four categories time frame, the 1 hour, the 6 hour, the daily, and the weekly. So then we look at individually as well, just still not clear on that side of it, but this is the tool side of it. We will go on to the financial, the charting side of it, the technical side of it. Okay, so apart from that, also on June 14, we can see that we have got the focus on New Zealand dollar forecast, and we can see that it's got a bit of a positive stand anyway, because it's reacting onto the USD, a little bit of USD weakness last week. Okay, wait a second. CAD USD buy on US trading time. Yeah, usually you can say that. But then we're talking about US buying the CAD, so that means you are selling the USD CAD, right? You are expecting the downward movement, but I try not to actually combine the knowledge of session with the like, you know, a lot of people have actually been trading the GBP open, the pound, the London session open, and all that. I try to avoid trading on sessions specifically. I try to look at the trend overall driven by more solid kind of news, because anything can actually happen at any moment of time. So that window of knowing what do you need to trade on that US session, GBP session, or even let's say sessions that are active, it's too small, and it sometimes can get a little bit too risky as well. So I don't really combine trading sessions with the buying or selling of the pair. But if traders out there have got the, how you call that, have got the what do you call that, the tools or EAs or something that is specifically polishing that side of it, and it's specializing in the US session or London session type breakout strategy, we call it, then it's okay. But not to actually have traders to base on that, especially if you're trading with pattern on trend and stuff like that, then you need to ask yourself whether or not you are a breakout strategy, breakout trader, range trader, or trend trader. So this is important, because if you are a trend trader looking for patterns like myself, riding on trend, looking at what we can do short, medium, and long term, then trading on session might clash with that. Because trading on sessions are breakout type, mostly strategy, and range and breakout together. And this might actually conflict a little bit with the strategy of a person who trades on trends, especially, or even anti-trend. Okay, so this is important for traders to actually know, because sometimes what happens is that we mix up a lot of strategies together, and then but we are clear how we want to trade. So there's a lot of people who can trade with a little bit of geometric pattern. They add it on to their sessions, session breakout strategy, but they know clearly that they are trading breakout strategy. So this is very important. How you're trading, whether you term yourself as a breakout trader specifically, trend trader, range kind of trader, or only trade in volatile times, meaning trading news, for example, and you are using the other tools like the geometric pattern or other things as just a confirmation. So then you can trade it like that. But if you are trend trading, you're going to follow through the whole price trade plan of mine and all that, is a trend trading kind of approach. Okay, just to make that clear with traders, so when they understand that, it will be less of a conflict for themselves. Okay, all right. So we have got this. Let's just check. So yeah, so we've got New Zealand's also June 14th, and then if we click onto the New Zealand one, because the as of today, the focus has actually been a lot New Zealand. So as you can see, it says here as well, New Zealand Q1 GDP is concentrated on more optimism to the upside, and hence the reason it is actually moving that way. So the question is, when we are looking at news that promotes bullishness for NZD or any other pairs or any other instruments, we always want to look at how solid that trend could potentially be, or will there be a little bit of correction first and then prolong. Okay, so usually the news like this could actually have it start off with more bullishness and things like that, because it's coming from the economic perspective, especially with business. Okay, so economic type news can actually last a little bit more, like a couple of days at least. So here, for example, we're looking at, it says here it worked with some pressure of the US dollar. So that means because of the US dollar as of last week, went down a bit, but then now it has actually proven to come up quite a lot. So you can see that in this article itself, it's focusing on US inflation, talking about NZD. You see the whole thing. talking about NZD, big headline, sorry, it's New Zealand dollar. But then as you read further, everything has got to do with the US inflation figures, consumer price index or CPI, and all the other things, DXY. So what this tells us is that the factor of control over the New Zealand dollar has a lot to do with what goes on in the States, especially with its CPI figures, economic figures, as well FOMC. So this is where we want to also focus on, meaning that we want to look at the strength of the dollar, because it does actually impact the NZD quite a lot for a very small country. And then NZD and Australian dollar are sort of going to be paired together to follow what goes on in the US. Okay, all right. So I think we've done on the outside of the chart look. So let's take a look at the chart itself right now. But before we go onto the currencies and trade signals, ideas, and where to enter, where to exit, and all that kind of stuff, we just want to follow up onto oil first. Okay, both UK oil, US oil, and UK oil, because as of yesterday, um, we've talked a bit about where can we actually buy. I've adjusted the buy entry for oil. For those of you who are seeing the chart first time, or I was not there yesterday on our Commodities Sundays webinar, we are still inside the buy zone. So that actually means that traders are buying and I am buying as well. I'm on the buy, meaning that the US oil is in a buying zone, which is highlighted in blue. And then it is actually very, very close to a trigger price that I have suggested yesterday at 71.15. So you can buy at 71.15. You can buy now, for example, because you are in the buy zone. And then you want to take profit at 73.30. So there is some nice news, as we have seen, that have fueled this movement of US oil to the upside. So this is your shortest term type buy at 71.15 and then exit 73.30. This is what I am most focused on, is this very small order at this moment of time, because I don't want to take further risk in just planning the buy and all that. Even though the news is looking good, sometimes the question to ask is, how long does this news actually last to push up this price, and how far can the price actually really go? So we have got a bullish buying zone in blue, basically based on that mother candle. That is a very bullish mother candle, body of that mother candle, and that is based on the weekly chart. So it's quite strong, it's quite solid, that whole area of buy, reasonably solid. But then the solidity of oil's prices going up is fueled by what is going on in the news side of it, which is also optimistic. So that's a good match, basically, fundamentals and technicals at this moment of time. So hence we've got that price there to focus on the short to medium term as of now, because we want to monitor as well, while monitoring, looking at whether or not it can actually go up really loads or not, or whether it can break out to the upside a lot more. That is too early for us to decide, because we want to be slow and steady, but then riding the trend, but also in the same time monitoring what could actually fuel that movement. And we don't take too big a risk or too optimistic and things like that. So we just want to keep our emotions in check, and then we want to take it slow and steady. You can do a pending buy order on the prices that I've mentioned here on the US oil. Okay, so let's move on to the UK oil as well. Now, the UK oil, we have got also prices. Now, as you can see, the UK oil is moving a little bit slower than the UK oil, moving slower than the US oil, meaning that the US oil prices already inside the buy zone in blue, but UK oil hasn't even gone inside, or haven't even triggered the 73.97 border area, not entry area for buy, but border. The border area hasn't entered yet into the blue zone. So once it has actually entered the blue zone, then we have got a pending buy order potentially to be triggered as well at 74.10. So 74.10, I apply the psychological numbers as well on oil trading nowadays, which is a good thing. I think it's working quite well as well. That means using tweaking the price based on psychological numbers only for entries and exits, okay, not for stop loss, entries and exits only. So all these ones here have been adjusted based on psychological numbers. So if the price for the pending order does actually trigger our first buy entry, it will be at 74.10, okay, 74.10. Your first TP 74.40, second TP 77.40, and your third TP 79.10. So you can carry on and put all these price on pending order on standby, okay, for that. So can we use that pattern to confirm the next sell order prior to this? Yes, you can. Actually, the thing about the, because I'm in the process of creating videos on specific patterns, and that does actually include the Z pattern as well. Now, what is interesting about the Z pattern is that the Z pattern, a good Z pattern is usually combined with a sharp pattern. So we need to look at two patterns at one time. So if we look at the potential Z pattern, if that Z pattern is only a Z pattern and not really attached to a sharp pattern, then the probability is not as high. But if that Z pattern is combined, sort of amalgamated with a sharp pattern, and that sharp pattern also looking really solid, then it makes that Z pattern even more solid as well. It does also depend on the Fibonacci ratios when you pull it from one end to the other end, and A, B, C, D, and all that kind of thing. So we will look at that as well. It can Z pattern is actually, it's called a 5-0 pattern, is known for that. But a lot of people, including myself as well from before, have been combining it with a sharp pattern as a confirmation. So if it is part of a sharp pattern as well, then I most probably will see it as a high probability pattern. If it is on its own, the Z pattern, then the C to D side of it, of the Z pattern, we need to look at whether or not other patterns are inside it, like the geometric ABCD, for example, or anything else that you can actually find in there together with the price action. So any pattern, especially, is good that you brought this one up, Mr. Kunan, is the Z pattern, or even the geometric ABCD, the Z pattern, the head shoulders and all that comes under the category of chart pattern only. But Z pattern seems to be categorized together with the sharp pattern as harmonic patterns. Okay, so harmonic patterns, the group of patterns comes under harmonic patterns, are a little bit more higher in probability compared to just the chart pattern. Because if we trade chart patterns only, like for example, double top, double bottom, head and shoulders, all these one, the flag and all that, that all comes under only chart pattern. So they need more confirmation as well. So that's why if I were to trade the chart pattern only, then I will trade chart pattern, combine it with geometric, and see whether we can find other harmonic pattern as well inside, so that we can actually trade it a little bit sharper and have got other patterns to confirm that. Because chart pattern, you have to find your own entry, your own exit. Even harmonic patterns, you have to find your own entries and exits. They don't give you the entries exit. They don't have like a trade plan, 1 to 5, and then you combine it with fundamental. No, it's strictly technical. It requires your memory and understanding the patterns ratios and memorize the ratios and all that. So sometimes it can be quite subjective if you trade only based on the pattern. But if you combine other patterns, other higher type probability patterns, you combine it with a Z pattern or any other patterns, then it can actually create a better sort of probability. Okay, so here, for example, I wouldn't see a Z pattern here too much, because I sort of didn't see what do you call that, the sharp type pattern didn't really form. So I would think that instead of the Z pattern, let's say for the UK oil, it's probably better to look at ABCD patterns here and then look at geometric patterns, because you got your ABCD. So if you go on to, let's say, daily chart, right here, you've got something nice here as well. So if I pull, because you see how it bounced off from the EMAs as well. So if I take A here and then I pull it here, let's say to here, just to make sure that my C point is 38.2 minimum, then I've got an A here, B, and then C here, right? So let me maybe put it here. So then if I do this and take this one up here, AB equals CD, then I can see that, it still needs to go up to the borders of that 73.97. So still you can actually, some traders, they want to buy and buy now, for example. Yes, you can, but, you want to look at whether or not it might reverse first before entering into that zone. Mainly because if you look to the left as well, let's say daily chart right here. So more important than the pattern is also to look at the price action on the left. Let's say you want to buy now and you see a pattern, let's say, it's probably best to look at whether or not it might reverse at this moment of time. So right now, UK oil, there's a potential for it to reverse because there was a big resistance right there. Okay, so it is now exactly on resistance, but the best part of it all as well, price action is really very, very interesting and very powerful as well. So then we look at price right now at 72.72. So that 72 itself is so close to the 80 psychological number. So if I was already buying my UK oil, I would have exited at 72.70, right? And that does actually get confirmed with a very strong resistance here. See, strong resistance here, strong resistance there. So that's why it's very, very risky at this moment of time to actually consider a bit of buy and all that. I would exit as of now for all my buy of the UK oil just to monitor the price, just to wait until it go past this, and preferably entering the zone first, and then we will polish it up with any patterns that we can actually the patterns actually, this I have not really advertise it out there, that to use the patterns is exactly like when you have your main meal, you have got the appetizer, you've got the main meal in the middle, and then you've got the dessert, right? I usually see the patterns, including my patterns, my price patterns, geometric patterns, the advanced ones, the beginners one. I usually use it more or less like a dessert to confirm it, not at the beginning, not as an appetizer, not as a main meal. The appetizer and the main meal are price action solely, and trend analysis, market analysis. Trend analysis, market analysis, whatever that's out of the chart is my appetizer side of the menu of trading, the trade plan. The middle part is where I move from the fundamental after picking up the pairs and all that. I pick the right pairs and I put it onto my main course meal plate, right? Then when I am onto the plate eating my main meal, basically what I'm doing in the process of eating my main meal is to combine the appetizer, which is the market analysis, trend analysis, together with my technical analysis. So technical analysis with the price pattern, with the price action, price looking to the right, looking to the left, mother candles, all that are my main meal. And after I have my appetizer and the main meal, only then I usually brush it up a little bit, enjoy my dessert, which is the pattern side of it, just to sort of polish it up a little bit and confirm that. So that's basically how I take it. But of course, each one of us will actually look at a pattern straight away, because it's only natural. So I will as well look at, okay, the first, even at the appetizer side of it, looking at reading and all that, maybe the day before and all that, I've already seen in my mind some patterns, yes, but I will leave that for later on for dessert. But of course, you can actually think what you want, right? Because sometimes you are on the menu, as well, let's say, and you already eye the dessert. Yes, you notice what dessert they have. So we notice what pattern we have. That's no problem. But we want to concentrate on drawing, spotting the pattern, polishing it up, and all that as the dessert side of it, not as the main course or even the appetizer yet. The action of doing it, noticing it is no problem. Okay, is that all right? So yeah, this is important for us to realize. This is how we trade on the patterns, because the patterns are confirmation of price action. But then what is more powerful than just the pattern as a standalone strategy, which is not a standalone strategy, is your notice with price. The notice with price and the notice to the left. To the left is so powerful that basically it gives you a lot of hints, and that hints can actually be married into the fundamental news site and any readings that you have done outside of the chart. Okay. All right, so that is the UK oil status. So you can easily have all your pending orders right here, just to, have that all planned up. But it looks like it is much slower than the US oil, right? So it's because they are totally separate as well, different factors, different, they are even supplying it to different countries as well. From Brent, from UK oil, it transports to total different clientele as well. They've got different control over different seas, and then we have got US, total different dynamics as well. But at the end of the day, comes under the crude oil energy sector. It has to somehow tally, but it tallies, it sort of meets in the middle sometime and then go together like that, So, but it's moving slow also because it's lack of the fundamental side of it, the geopolitical side of it. Like the US, it's got a lot there because you've got Iran, you've got the OPEC, you've got a lot of things going on there. Okay. So this is for the UK oil. So we have looked at US oil, UK oil. Now, very quickly, let's look at the gold. Now, very simply, gold is depreciating, going to the downside. We have also talked about inflation, positivity, optimism of the US to US dollar. So that does actually then communicate to us the downside of gold. And this is on the daily chart. So daily chart, it's looking like it is motivated by quite strong sellers. The reason I say that is mainly because of the way it is moving at the moment, motivated by bearish mother candles. So this is something that is hinting us that more downward movement may follow. Okay, but let's take a look at, let's say, the weekly chart and then look at the bigger picture. Now, when you look at the bigger picture itself here, that reversal right there has been sort of confirmed with a previous depreciation of price from that mother candle right there. But right now, it is trading at 1861. We're looking at the weekly chart for now just to get more picture and more data as well, more solid data on higher time frames. So it's trading at the 1861 area and it's going downwards. Now, as it actually moves downwards, I see that it has already entered, based on the weekly chart, a bearish or selling zone already. Okay, so I want to highlight that selling zone for you, and that is based on that mother candle right there. If you guys can see that mother candle right there, it's quite significant mother candle. So I just want to highlight that area right there. Okay, so then we use the blue line, of where that mother candle, bearish mother candle, has opened the price was at 1870. Now, where it could potentially sort of end that selling as a support would actually be at the closing price of that mother candle, which is at 1785.99. Let's say 1786. So I've got the 1870. From 1870 right down to 1786 will actually be your selling zone. So when I say that we are in a selling zone, yes, you can actually sell. But of course, the risk is yours. But then we are in a selling zone. This is just to tell you that don't buy in a selling zone because you will get trapped. So selling zone, of course, you want to sell. But as you sell, you want to look at buying level as well, support levels, just so that you sell and you sell safely and you exit, very important, at a good place. So the good place meaning that as it falls down, where could it actually potentially be good to exit because there are support there previously? Now the answer to that is from the mother candle that I can see previously. If you look to the left, you've got one mother candle, bullish mother candle, and another bullish mother candle. And if you look at the closing price, it's very close to one another. But then you push this one up a little bit to the one that is higher, the opening price, sorry, of that mother candle, the bullish mother candle. That is your support area as well. So right now, what I can say is that if you are selling, thinking of selling, already selling, make sure you exit at the 1844.30 area. Okay, so let's say 1844.30, you are out. So that would actually be much better for you, so that you've got some room right there. Because also if we look left a little bit, you've got some way to battle as well, because there may be a support coming through right away right now as well. We don't know that yet. But if you go into the lower time frame, you can see, okay, it is still looking like you've got bearishness. Still, the sellers are interested in selling right there. But then you look at the 4 hour, there is one area you need to be careful of, because you got a bit of there. So maybe if you want to sell, not just now at this very minute, this very second, wait until it goes lower a little bit, then you can take profit at the price I've mentioned earlier on. So entry maybe just a little bit more, because it might actually reverse right here as well following that. But once it goes down a little bit more, that means under the 1859 area, let's say 1857 or 1856, then you want to sell. Then you sell maybe a little bit better, because here you see it might actually reverse up a little bit, but this is just short term to medium term, just to show you, because right now it is looking like it might want to correct itself lower and lower and lower, because of what's happening in the States as well, more upside. So that's basically it. But if you look at the 4 hour chart, it's quite clear as well that there is strong support right here, strong support right here. So naturally it's better for you. Yes, you can sell, but not at this very minute and second. Let it come down a little bit more, lower than, maybe lower than this area right here, which is 1858. So let's say 1850. So 1850 onwards you sell, then you take profit 1845, something like this, a little bit higher. So that may be a room right there for you to actually sell. Okay, so I'll put a black area right there. So your sell area is in there roughly. Okay, there you go. So that is taking it, little by little to the sell, just to confirm that we have. So the dessert part of it is then maybe perhaps you have got a little bit of ABCD pattern going on with the C point in this area, to be not too bad, because C point is at 78.6. So if I were to take that A here, go down B, and then double click that, take that through. Let's say I'm using this point right here. So, and here. So now this dessert is showing us through the patterns that it actually aims at exactly where the support is and where we should be exiting as well for the ABCD pattern. Okay, so the ABCD pattern was there all the while, but we just started drawing it only for the dessert side of it. That means at the last end to polish it. Okay, and here it is giving us the indication the centroid could have started way before 1879. Okay, so that is it. Let me also just color it as well. Okay, so we can see all this action clearly as well inside the triangle. There we go. Okay, so this is your gold on the 4-hour chart. It's quite clear, it's quite nice. You can understand that we've got some fundamentals, yes, but then you're selling, under this, coming into the black area is better, but let it come down a bit lower as well, maybe 1856, 1850, also because you have got this blue line here, which is your 200 EMA. It needs to come under the EMAs as well, just so that it doesn't find the EMA as a support area and then go up as well, because each one EMA could potentially be a support as well. Okay, right. Any questions for gold? You guys okay so far on gold? Then we can move along to the currencies at this moment of time. You guys okay? Yeah, on gold, yeah. All right. So let's move along to currencies. All right. Good. Okay, so currency-wise, we start off with the Euro USD. Okay, so Euro USD, I've got two charts here open, mainly because I've got previous drawings since 1 month, maybe a month and a half ago. So it has respected all these buying zones, support areas, selling zone as well, very, very nicely. It has, reacted to the lines that I have previously drawn as well. So no added lines here, but then as you can see, you've got the support right there, very nice. You've got the support right there, it's stuck there, went up there, came down, also went and trapped itself into the yellow areas that I found as support. Now it went down. Now it's trading at Euro USD is trading at 1.2096. We're looking at the 4-hour chart at this moment of time. So if we are expecting more USD appreciation, obviously we are looking at more selling type opportunity for the euro as opposed to the USD. But also, as it is trading at this moment of time at 1.2096, I see that it's approaching the 2080 psychological level, and coincidentally, the euro USD is already trading and actively falling within the selling zone. So you are supposed to be in the sell side anyway. So here it's because of this mother candle, bearish mother candle right here, has created for me a nice bearish zone right here. I've seen a lot of levels as well in this area. So if I go onto the daily chart, let's say, give you a bit of a bird's eyes perspective of what's going on with, let me get rid of this yellow trend line here. Okay, it is actually looking a lot like it wants to sell much more. Now, as it goes lower than 2050, I would guess that it might want to then go even lower and find this area of 2010, maybe 2000 area as the support. So whatever happens at this moment of time, I feel that it's, I see clearly that it may fall further, as it is now, right now, falling further as well. And I see it finding support at this area of 2050 area first. If it doesn't find support 2050, meaning that it goes lower and lower, it goes to 2065, let's say, or 2080, and it goes lower than 2080, and then it's heading towards 2065 area, then you can say that, that there's just a lot more selling pressure onto the euro. But once it goes lower than 2050, then it might want to enter into another selling type zone, and that would actually start off a nice selling zone from here. Let me just draw that properly. Okay, so the lower it goes, the stronger to the downside it might go. Okay, so it might extend the selling zone there. Now, this is quite a nice area as well for the support, because it's supported by quite strong supporting area right here. So that's quite good. See, it's confirmed by the ending of the mother candle there, and also you've got support right here that is made up of two candles, mother candle, one bearish and one bullish. So that coincidentally is at 1962 area. So I would think 1950, 1960, no matter what, you have to exit, but maybe higher areas as well. It's quite good. I would think maybe to watch out for this area as well as a support 1980, exactly psychological level. So I will get rid of this yellow line right there, make it clear. So basically, we are on a biasness of selling the euro versus the USD, and it may extend lower and more selling opportunities once it goes under the 2065 area, especially 2050 area. It could then reach the 1980 area right there. So you've got some selling pressure. Selling type opportunity right there. Also because, here it has created already sort of a nice border in terms of not letting euro go up much more, and then it been confirmed by this very, very powerful pin bar pattern of this candlestick as well. Okay. All right, there you go, guys. This is for the Euro USD. Now, let's also look at the other ones. I want to look at USD CAD, mainly because of oil's position as well. It is looking like, let's just perhaps get rid of all this and start scratch right there. Okay, good. So we have got this. I'll lower this one here, and weekly chart and daily chart, it is all showing the downside momentum for the USD versus the CAD. So we may get this hint that for this pair in particular, USD versus CAD, CAD may be appreciating much more, mainly because of oil's position, okay? But if we look at the 4-hour chart, it's already found some resistance there. So it's found resistance exactly on the 200 EMA on the 4-hour chart, also with a nice pin bar right there telling you that nope, it's not going to go up much more, mainly because it's exhausted already to go up. But then the nice thing about it is that that resistance is quite powerful. Why? Because as we look into this area here, boom, it goes here, and that is respecting this area there. So these are all areas that is strong in terms of resistance. So I only find more reasons for it to actually come down as opposed to go up, unless it breaks out with something very powerful to go beyond this area and go up above 2180 and above, trading at 1.2200 and then go above as well, then yes, maybe a change of trend right there for the USD CAD. But at this moment of time, I see that it might actually come lower and break out much lower. But I think we need to stay away from this particular pair for now, mainly because I would prefer a sell type order, but the sell entry of the sell, I think it should actually be not now, much lower. So if price does actually fall and go much lower, let's say 2150 and below, like 2140 onwards, so 2140 can then be your selling price, then I think I would go into the selling type zone more. But then at this moment of time, a little bit too early, because now it is in the middle of whether it should be buying, should be selling, whether it's bullish, whether it's bearish, that kind of mode it is from a technical perspective that I can see. So more selling can actually take place more solidly under 2150. More solid buying can actually take place above 2200. Okay, so I think it's a bit too early at this moment. So 2200. Okay, so no buying, no selling at this moment of time. It's a bit too early for USD CAD because it's a bit risky as well, mainly because we have it made of USD, which will be driven by FOMC and all that. And then you're trading CAD, which is driven by the oil scenario. So we have got not at this moment of time to consider the USD CAD trade, but it can actually be a very nice trade once it actually goes under 2150. for the sell zone and the selling zone, and then after it goes above the 2200. But for those short-term type traders and you want to still look at what you can actually do at this moment of time, there is a bit of selling to go on still, but then you need to exit quite soon as well. So, your sell, yes, but then you see it's already touched there. So I am not sure at this moment of time. So because I'm in doubt exactly, it's not clear, I'm not thinking of any trades with USD CAD as of now, because I'm thinking about the big picture and the big moves first. So the big moves can actually happen in the area that I have talked about, because you see all this area only started above. So 2210 can be a nice buy pending order, but that may take time or not take time. I'm not sure yet. For the sell, yes, under the 2150 area. So no trades as of now for me on the USD CAD, only because it's not clear, but it's trading in the middle of areas that are quite close to psychological numbers and all that, not the right pricing as well. So the market is giving you hint that clearer areas are under 2150 for the sell, clearer area for the buy is above 2200. That's it. Okay, that's for the USD CAD. All right, any questions at all, guys? Any questions? Right, now for CAD JPY, this is where we found the sort of potential Z-like pattern. And if we look at it like this, okay, so this area right here is where the sharp pattern as well, roughly, but not a very nice sharp pattern. So I would think that because the combination, if there is a combination of the Z pattern together with a nice sharp pattern, then I would think that this Z pattern will be a bit higher in probability. But because I don't see it combined with a nice sharp pattern, or the sharp pattern does not really exist here so much, then I see it as a standalone 50 or Z, lazy Z pattern, and a standalone on its own kind of pattern, not attached to a sharp pattern. The probability may be also quite low. Hence the reason we found the loads of correction, and then we look to the left, with correction as well, until it goes above that 92.05 area. Then I think it, and if it reverses there, then it would actually be considered as a Z pattern, but still just a Z pattern that is not really high in probability. You can still trade with it, but then you want to combine other type of patterns inside this area, ABCD perhaps, and then when you come down and you trade it to the downside as well, then you want to look at other patterns that would actually confirm that downtrend as well. Okay, so that is for CAD JPY. So let's take a look very quickly with the USD, GBP, GBP AUD, and NZD pairs. So I want to look at NZD JPY, NZD USD as well, of course. Let's take a look very quickly on that one there. I've got something to share as well. The Euro CHF seems to be looking quite good in terms of the ABCD type pattern here, right there. And basically it is to the downside. We have got the D at 1.08 60 to take your TP. Now it's trading at 0.880 area. Okay, so 0.860 can actually be your take profit for the sell, but right now it needs to go under first. So if you have not entered, it's probably better to wait until it goes down to 1.0865 at least. Then you sell it at 1.0865. Then you don't have much room on that area right there though. So yeah, this one here I think is ending already. I think majority of traders, including myself, have already exited quite early on this one here. Not really for now kind of trade for Euro CHF. So let's replace this with the NZD. So NZD USD. Now NZD USD, let's see what's going on. I mean, at first glance itself, not really that clear because we've got this entanglement of all the lines, the EMA lines as well. Not really very clear, very nicely. Everything is sideways. So I think I will avoid NZD USD for now. But then let's take a look at NZD JPY as well. All right. Again, it's not that clear, but it looks like it's it is heavy on the downside for NZD so it's not really that clear. Probably not a good pair to look at. We'll take a look at the other ones. GBP AUD as well. Let's see GBP AUD, whether or not it's giving us more clarity. Okay, it's definitely to the upside, but we've got a lot of sideways type trading. I mean, the line itself, the 3 lines EMA, exponential moving average. It's finding very strong support on these areas, so it wants to move to the upside, and it's clear that it's trying to slowly, but it's dominated by a lot of bearishness, as I can see to the left as well for GBP AUD. So yes, it might want to show the market it wants to go up, and maybe there's some positive news and stuff like that. But for whatever reason that you are buying, make sure you will be exiting soon, at least at the 8350s area you can exit, as well as the 8400 psychological number. So before 8350 psychological number, maybe 8340. If you're buying now or you're thinking of buying, just make sure you're exiting there. So also for the short term, it looks like it's got the 8320 area right there. So I would think if you really want to buy for GBP AUD, it's probably safer to buy at 8330. So 8330, and you can then take it at 8390 perhaps. Your take profit, that means you've got about 30 pips or so to make from there. But right now it's a bit risky. It is causing some resistance right there in the psychological level as well. It is trading at 8304 now, and that is very close to the 8300 psychological number. So you have to wait until it goes up a little bit in order for us to buy for the GBP AUD, but not really very clear and nice in terms of trend. But if you want to trade, like that little spaces, Black Sea area, yes, you can, but they are quite small. Okay, on GBP AUD. Let's take a look at the Euro GBP as well. So here, okay, Euro GBP seem to be a little clearer in terms of trend on the way it actually moves, on the way the 3 lines are on the daily chart. Let's look 4 hour, okay, 1 hour. Okay, so from 1 hour itself, it looks like a lot of depreciative value, and then when you go onto the 4 hour, the downtrend gets a little bit stronger. But what I can see on the 4 hour itself at a glance, we have got an area of support that it is trading on. So the current price for Euro GBP is at 0.8580 psychological level, 83. And that 83 psychological level coincidentally is at a very strong support area. All here are very, very strong support area. So there is a potential for it to just burst up, go up compared to the GBP. So the euro has a potential, I think, to go up as a corrective type move. Maybe something might just push it up on the news side of it. So with that, I think for the buy side, there may be a potential short to medium term, mainly because of some very powerful candles, mother candle, especially like this one here without the wick. You've got some more mother candle there. You've got some more mother candle all over this area right here. So giving me hints that maybe a potential for the buy side, but it starts here. Now that starts at 85, 86. So I think 86.00 will be safer for you to look into the buy side, okay? Because right now it's quite close to psychological level as well. So 8600 onwards, it will be backed by some very powerful mother candles. So you will have some power. 8600, so 0.8610 or 8610 onwards, you can actually put a buy. So here would be safer, better as well. It's supported by some very good mother candles right there. and then you have got some exit areas as well. This one here is compliant with this one, meaning there's a confluence area right there, and that was at 86.20. Not so much space right there, but I think as it goes higher, you might get more area that you can actually exit, and more higher it goes, higher the power of buying will actually be for the euro. So I think it is also has got to do with the economic side of it, data, news as well, and whichever that you can actually see. But at this moment of time for the buy, maybe a little bit early, but it's already approaching 85.86. So 85.90, if you want to take the risk to buy, yes, there is a price you can buy at 85.90, but make sure you exit, 86.10 or something like that, but that will give you about 20 pips or so. But if you want 86.40 as well is possible, but not too soon. Maybe if you are doing that, then you want to monitor the market. If not, then do pending order with your stop loss as well. But yeah, it looks like there are some potential that it wants to move up quite high. If I go onto the daily chart as well, I can see there's no wick onto the current candle, and the current candle seems to be a bullish candle like that. And then I go onto the weekly chart, I can see that it is building up as well to the upside. So yes, there is a potential that something might drive it to go up a bit more. So you've got your take profit before these blue lines right here, okay, because they are resistance area. All these blue lines that I've put in are potential resistant areas. So let me just change the color to red. Okay, resistance. So if you're buying now, make sure you just exit before that. There is one very short-term resistant area right here on the 4-hour chart as well, and that is very close to the current price. So let's see what happens there. I'll just mark all these blue lines, change the color to red because they are more resistant than support, just so that it gives you the warning that if you're buying, make sure you exit before it touches that red line right there. Okay. Okay, that's basically it. Euro GBP. Any pairs that you guys want to take a look at for now? Any pairs at all before we end the session? Questions? Okay. Okay, good. Yes, for any questions later on, you guys can direct message me, DM me straight away on Telegram or anywhere. And yeah, that's basically it. So we want to look at also, today is Monday. We can trade, but we have to trade like this, like little spaces. But I think some trend for certain pairs, especially, will actually clear up by end of today or tomorrow, mainly because of all the quite heavy economic data docket that we are expecting starting from tomorrow, which is good. So yeah, let's keep up into the monitoring side of it, but not too much monitoring, just so that you don't get overly stressed with over monitoring. Over monitoring can actually create over analysis. Over analysis can also create over trading. So this is going to be like a chain reaction kind of thing. So you just want to relax a little bit as well, and just pick the right pair as well to ride along the right direction. That's the most important lesson that we want to learn and keep practicing as well. Okay, so that's basically it. Okay, guys, so with that, I want to end the session, and message me anytime, and then we'll meet again on Wednesdays, midweek review. Meantime, happy geometric pipping, happy trading as well. So all the very best, and we'll see you again very soon. Okay. All right. Take care. Take care, guys. Bye bye.